Let's be honest, we would all be better day traders if we only knew when to stop trading each session. Before many people discovered NetPicks, they wound up giving back a lot of their trade profits, and it actually feels worse giving back hard-won profits than it did just losing them outright. Well, the real problem is that they had no intelligent or effective way to actually know when to stop trading. If you quit too soon, you'd miss a bunch of good winners. If you traded too much, you gave away your profits. And like every single coach at NetPicks, we all started as customers. And one of the first things that we were told was how important it was to utilize the power of quitting. And to be honest, it made absolutely no sense. If the trading strategy was so good, then why would I want to quit trading? Now, it's such a counterintuitive concept. And later, as I learned more and actually began to turn trading around and have bigger profits, much of the newfound success was largely a result of actually empowering myself to stop trading. Quitting actually made me more money over time. Yet to this day, it remains one of the least understood necessities to ongoing success. But for those who understand it, it's a big part of their trading plan. The power of quitting, the POQ, it's a dynamic goal-setting strategy that allows you to take what the market wants to give you while allowing you to quit with positive results on most sessions. In its most basic form, you need to get a winning trade and have a positive result. What is really exciting is that at times this can be accomplished with the very first trade of the session. Other times it might require more trading. And there are also different formulas that you can use. POQ2 would mean you need 2 winners and a positive result. POQ3 means 3 winners and positive on the day. And the PTU trend jumper actually needs a full target winner for one of its winning trades to qualify for POQ. And one issue that gives many traders problems is knowing when to stop on a hard session. Now, there will be sessions with all strategies that just do not get positive. How long should a trader continue to try to get positive? What's a good circuit breaker? This is one of the most difficult questions to answer because so much of it depends on the trader. How long can he or she trade? How much capital do they have? How much stamina and attention span do they have? How much skill? Now, the only way to really know that answer is to actually conduct your own back tests so that you can come to the best answers based on actual research and understanding. Each strategy, it's different. Each market's different. And some traders love finishing a session one and done. That's winning on the first trade to satisfy the basic POQ1. Other backtesting has shown that the actual average profit per trade, the average net of all trades in the backtest, is actually higher with fewer trades. POQ2 might yield more net profits, but it's actually less profitable and a lot harder day in and day out. Well, why work harder? Most people should work smarter. If you can increase your average profit per trade, all you have to do is increase your position size as your account grows. You don't need to trade more to make more money. Now, some traders want to trade more. Maybe they like the action or they're trading for income, but they also see the benefit of a POQ concept. Diversification is certainly a smart thing to work into your trading plan. How does one satisfy all 3 while still remaining consistently profitable? Here are 2 ideas that have a lot of merit. Diversification. You could begin trading one market and as the session progresses, stagger in other markets. Crude oil or a Forex pair could start at a certain time in the pre-market. When the U.S. market opens, you could trade an E-mini or a grain futures, for example. You could also include some swing trading into the mix to diversify the type of trader that you are. Mini sessions. To find success with mini sessions, you must know the best time to trade each market you're interested in. In the PTU, for example, we learn how to use tools that help us isolate the most productive times a day to trade a specific market. Some markets have various pockets of time that are more productive than others. Now, taking that idea to the next level, you can treat each pocket of time as a unique session, each with its own start time, stop time, and POQ goals, typically POQ1, with a full winner being necessary to qualify. That means you can have a full winner and be positive before you quit the mini session. You can also combine it with a maximum number of trades, a maximum number of losses, and a hard stop time, which would end the mini session. Then you just wait for the second mini session to begin. This second mini session will have its own unique trade plan and POQ, as we just talked about. So here's some examples. Let's say you're using the trend jumper, for example, the calculator and automation. You determine a 2-hour and 40-minute window to trade crude oil futures early in the morning. The trade plan will allow you to take a maximum of 6 trades or 2 losses with a POQ1, whichever happens first. The second session begins later in the AM and uses a completely different chart and trade plan. It goes for 2 hours and it has its own POQ. Both plans operate at their own cadence and have their own personalities. As separate plans, they're each profitable. Combining the two adds more chances to grow your account while sticking to the less is more concept. Get to have your cake and eat it as well, in other words. For the Dow E-mini, you can actually have 3 windows of time to trade 3 separate trade plans. Each one is profitable in its own right, but combining the 3 adds a lot of firepower and juice to the bottom line. It's also very flexible. And if you're not available for one of them, you might be available for one of the others, and it's a really great way to go. But what not to do? One of the most vital traits as a trader you must have is not to be suckered into overtrading. Combining a smart and dynamic goal-setting strategy to your overall trade plan is essential to success. Anyone can make a winning trade. The hard part is hanging on to your hard-earned gains on a steady basis and consistently growing your account. Well, that's why we trade. Remember, it's not the quantity of trades that we take, it's the quality. It's being able to keep our profits. Controlling one's risk exposure to the market is critical to success, and the power of quitting is the perfect solution. But it might not be for you. Understanding that, consider the concept of trading a mini session and focus on the most productive times to trade each market. Consider the idea of the mini session and learn to focus in on the most productive times of day to trade while still controlling your exposure and keeping your profits. But whatever method you decide on, the key is to ensure that you are not turning a winning day into a losing day because you are undisciplined in your trading.